You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with everyone's favorite option show. At least I hope so. Certainly your favorite bi-weekly option show. Yes, it's time for the old OB, the old option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old Options Insider, I should say, Radio Network. You guys know the drill by now, how to find us deep in the archives. You want to just check out everything for yourself on your own time. Well, the mothership, the flagship, the Options Insider is a place to go for you. You can also grab our mobile app. It's there as well, and that'll get you, both will get you access to quite a lot of content. So brace yourselves if you're going that route. If you want to just have it delivered to you on your own schedule, well then, of course, iTunes, TuneIn, Stitcher, Pocket Cast, so on and so forth. You guys know the platforms by now. Get it there, subscribe, set it and forget it. Make sure you keep an eye out for, if you haven't subscribed to our full network feed yet, make sure you do, because you get all kinds of good stuff, like the cool panels that are coming out of the Options Industry Conference, exclusively from us here. A little gift to you, or a little treat for our audience. You don't have to go all the way to Florida and spend thousands of dollars to go to that conference. Nope, you get it for free because of us. So check it out there. If you haven't upgraded to the full network feed, do so. You get a lot of good stuff, a lot of good panels coming out there, absolutely for free, which is, I got to think, pretty cool. And then, of course, if you want to join us live, see how the sausage is made, mixler.com/options-insider, I believe. You can find the link on all of our social media platforms every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. So we make it available pretty much whatever degree of immediacy you need. We got you covered. Make sure, of course, you have us covered. Hit us up. Questions, comments, insights, little snide side remarks against Uncle Mike. We'll take them all here on the old option block. I can already see him taking umbrage. Let's bring him on instead. Formerly of RCM Wealth Advisors, now the man about town over there at St. Charles Capital Management, Uncle Mike Tosaw. Uncle Mike, welcome back to the show, sir. Did I get the name right?
St. Charles Wealth Management, but you are correct, formerly of RCM, but still with RCM as the RIA that provides my compliance and whatnot, and overall joy and good cheer. And I don't take any umbrage for the snide remarks about me. You've been dissing Andrew long enough. I can take some of it for him. We're a team here. We only claim team umbrage today. Right, Andrew?
I'm on board with that. I was actually quite shocked that he gave you the slam first. I'm like, whoa, wait a minute. Is this a day with a Y in it? I can't believe I escaped.
See, I thought I'd mix it up, throw you a bit of a curveball there, because I always throw it at the Rock Lobster first. By the way, none of these snide remarks are coming from me. They're coming from our listeners. I just present them to you as they arrive. But yes, that voice, listeners, also was the Rock Lobster, Mr. Andrew G. from Hinterlands, Parts Unknown, a.k.a. Maine. Mr. Rock Lobster, welcome back to the show. Aside from dodging umbrage, how you doing today?
I'm not doing bad, but I believe the term for you, Mr. Longo, is enable. You enable your listeners to throw those slings and arrows. And surprisingly enough, prior to Memorial Day, it's we're swimming. The water's warm enough to swim in. Although you don't normally get that, but we're crazy kind of tropical breezy warmness going on here.
Yeah, let's get into that swimming. Let's do a little swimming of our own. It is time, perhaps to swim upstream to just beat the metaphor to death. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
There we go. We're not starting the show over. That would be silliness. That would be madness. No, we're going right on into the trading. A lot of lights and whistles and dials and buttons in here, listeners, and sometimes it's easy to hit the wrong one. But it wasn't the wrong one today, at least for Uncle Mike and all the rest of you bulls out there. A lot of rally-ho going on in the broad markets. Most of the major indices up strongly today. S&P kind of the Goldilocks today, right? About 0.75% or so. The Dow, usually the lagger, the Dow rally-ho mode up over a full percent, 1.2%. Right around 300 handles to end the day. I know everyone loves to quote the amounts on the Dow because the numbers are just so impressive. It's down 1,000, it's up 500. So it does make the rounds on the nightly news just for that alone. But still, percentage-wise, leading the charge today. And usually the tech-heavy NASDAQ is kind of leading the charge, taking a back seat today, only up about a half, maybe slightly ticking into 0.6% or so. All that green on the screen means red. On the old vol screen, VIX cash easing back down right around, closing the day right around 1310 or so. Let's see how low we got. 1278 is the low intraday. So dipping low. I like that level. I'll take that level. We can dip as low as we want out there in that side of the fence. Let's see. And as a result, our old friend VXX coming in a little bit again today, right around 34 off of a handle. And so that got lower as well. That got down to about 33.5 intraday. So all of you erosion fans out there, continue to celebrate. Of course, as the Rock Lobster alluded to, it is the kicking into the holiday weekend, the kickoff period for summer. And an interesting time. And of course, usually holiday weekend's not the most active periods the week after. So I might see a little bit of vol coming in, and that's pretty much exactly what we saw today. Let's turn around and start with good old Uncle Mike. By the way, Uncle Mike, before we go any farther, I wanted to let you know we do have a poll active right now because it is Monday. It is strategery time. So in a little bit, in about 20 odd minutes, Uncle Mike will be coming on to dispense some options, wit, and or wisdom. So we asked you guys, what do you want him to talk about? We gave you guys 4 choices. We said, do you want Uncle Mike to talk about hedging with the VIX versus SPY puts? So that old debate of VIX versus the underlying. Or do you want to talk about how he likes to correctly, some might say profitably, buy out of the money calls? A difficult strategy, kind of swimming upstream when you're doing that one. But Uncle Mike thinks he has it cracked. He could talk about that. Or do you want him to talk about maximizing short put spreads, in particular the long leg of the short put spread? Everyone likes to sell puts to collect stuff, but you got a long leg there and it doesn't really go away, and you could do something with it. Or the old saw of how to roll your short calls, your covered calls. Uncle Mike, we still got a little bit of time left. Do you have a preference, and then what do you think is winning?
I have no preference because I want the people to get what they deserve, and I want this is America, and I want the majority to win, and so I have no preference. I am here to serve the people. My guess is that using calls on the VIX versus puts on SPX or on SPY or on the S&P, whatever, is in the lead.
Yeah, it's a good guess. It's number 2 with 27%. Number 1, though, with 45%, Uncle Mike. Profitably buying out of the money calls. People seem to be, they want to explore that a little bit. So we'll see. The votes, it's not final yet for another half an hour or so. So you got time. Maybe if you want to go in there and tweak the numbers, now's your chance, sir. But it's so far, buying out of the money calls is what we're going to have on the docket in a little bit. We like when the people get involved in voting for what comes next on the show. Speaking of what comes next, Uncle Mike, what comes next is usually where you tell us what's been catching your eye in the marketplace. So have at it, sir.
Well, it seems like the big story of the day wasn't necessarily today. It was before market opened. It was looks like the tariffs are relaxed for the time being. So some people say the president is caving. Other people are saying that the president was a great negotiating ploy to get what he wants. And that the past administrations did nothing. I really don't know what it means, quite frankly, but I know it means that the markets were higher today. Most of the market gains came from a gap up. I think all of it actually came from a gap up. Still, I'd have to look at my chart here, but we were up quite a bit in pre-market this morning. So I think a lot of this does have to just do with the news from the China tariffs for the reasons that we're up. So that's the bull case, meaning that if we can build on that, we could do a lot of great things with this market. The bear side of it, though, is that we were not able to get through, I believe it was 274.03 or 08, somewhere in the low 274s for the high that we had about a week ago. We were not able to get through that today. So that is a little bit of a concern if you are a bull, but the reality is that we had a nice up day today. So all of the people in my bull camp, including myself, are definitely grinning. So it's a happy day along those lines. And if we don't get through that little point of resistance that I just mentioned, I don't know if it's necessarily a very strong point of resistance, but time will tell with that. Of course, we had oil going higher on the day today. So not in large amounts, but it does continue to go higher. So we did actually, I think we got a little bit of market support from that, quite honestly. And there's still talk of interest rates, but for the time being, it seems to be kind of in check. So that is what is lighting up my tape today in the markets.
All right, and if you haven't voted yet, listeners, you got about 20-odd minutes to make your voices heard there. Get on over to Add Options if you want to pick something. Maybe if you see something, you want something that's not on the list, maybe you suggest it for next time. Maybe we'll see if we could twist Uncle Mike's. I know he's susceptible to a good chicken wing, so we'll get him in that, and then we'll see if he can acquiesce to your suggestions. So get him in over there, Add Options. If you're listening after the fact, that's good reminder to play along. Join us live next time, and you too can play along in the live poll. Mr. Rock Lobster, do you have a preference for what Uncle Mike talks about? And then what's catching your eye out there in today's activity, sir?
Then how about that?
There we
go. Am I back?
There you go. Yes,
you know
back.
Why my dog jumped off the couch and tangled up in the cord, and that's what it was. Sorry.
See, the first day I don't give you the umbrage to start off, and this is how you reward me. Huh? This is how it goes.
I'm blaming my dog.
Yeah, here we go.
Cut that.
Too late. It's live, sir. The whole world heard it.
Oh, geez. To be honest, I think Mike's skill at buying calls, in a bear market in a bull market, you want some upside love. So I think that's something I think that will remain the favorite. My rule about options level bull market, and that's what we've got still. So and buying and using a couple of tricks to have at buying options and ways to finance them, Mr. Tosaw will be very illuminating on that point. So I'm guessing that's where the cookie's going to crumble in that direction. And as far as me, is just how this is I think the bounciness of the 12 handle in VIX because I just watch this stuff all day. We have not been able to drop and really kind of get to like low 12s and sort of stay there, this year basically. So that is, and what's happening is the futures seem to kind of be crushing and front running that future premium down. And every time they kind of oversell those futures, we just don't get the follow through with the cash. The market pulls back or something like that. Like Mike said, the SPX didn't quite break to another level, so SPX doesn't go up, and then the VIX cash really can't go down, and everything just kind of hangs there in suspended animation. So we've had that, although there is some opportunity for vol trades. They're not quite as juicy as they were last week. So I didn't have anything new today, mostly actually just trying to trim some positions. But as far as new stuff in the vol space goes, it's kind of like a little wait and see. Is this trade thing real? And then I think there was more kind of tweeting about the FBI and campaigns. And so I think maybe some of the early happiness or euphoria sort of went away once there's almost like a little tweet barometer as far as the market goes lately. So I think during the weekend it was okay, and then all of a sudden, there was more tweets, more president tweets, and the market, whatever volatility, SPX seems to be a little bit intertwined with that. So can't get away from it. But other than that, I think maybe an improving trade situation. Also, the market loves Mnuchin. They love him as its Treasury Secretary. It looks like he's doing a pretty good job. Stocks are higher. The economy seems to be doing okay. So I think, show me an economic meltdown when you had a Goldman Sachs guy as Treasury Secretary. I don't think you can find one. Or if there was, they fixed one, like when Paulson came in and kind of organized the 2008 debacle after basically got handed a hot potato, you know. So I think they make great Treasury Secretaries. The market seems to like Mnuchin, and I guess onward we go. So that's I think that's where we are. It's just, can we find upside catalysts to kind of get to new levels? That's really what we're looking for. I think, you know, at least right now it feels like everything's kind of sideways, which is why I think those vol futures, they sell them off quickly. The June future was below 14, which is pretty hard to believe already. It traded into the high 13s. So for that kind of aggressive vol sale, I think the market is getting just a little, sometimes it's getting a little ahead of itself selling the volatility, but who knows? Maybe they're all right, and we're going to see VIX at, you know, somewhere in the low 12s by the end of the week, and then all those guys are going to look pretty smart.
Indeed, they do. Let's look here. See, kind of a quieter. Most of the big names have rolled on out for earnings season. Still got some names coming out after the bell tomorrow on Tuesday. We've got Hewlett Packard, the Enterprise. I got Intuit. Before the open, we've got Kohl's. All you Kohl's fans out there, and a bunch of auto names: AutoZone, Advanced Auto Parts, and everyone's favorite, sure, the Rock Lobsters, Cracker Barrel. Today, of course, not too much, but let's look ahead to tomorrow. In particular, Intuit is also coming out after the bell tomorrow. It's a name I know a lot of you folks like to take a look at. Closing today right around 191.70 or so, up about 0.5%, a little more than that, so pretty much in line with the market. It's averaging about 1,500 contracts a day. Today, going into tomorrow's earnings after the bell, remember they have a whole day of trading yet, about 3,200. It's right around 2x their ADV. No clear bias calls or puts. They're pricing in right around $11, so that works out a little bit shy of 6%, about 5.7% or so in that range. So we shall see if Intuit lights it up here tomorrow after the bell. Speaking of lighting things up, let's see what's lighting up a collective tape, because it is time to look at some of the weirder stuff. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show that we break down the weird, the wild, the wonderful, the crazy that is lighting up our collective tapes. So let's kick things off where we always like to do, out there in Tesla land, where we like to look at some of these funkier puts. Some might call them catastrophes. Some might call them just crazy bearish specs. Some might call them hedges for some CDS swaps. I tend to lean there, but you never know. People have been talking a lot of bearish sentiment about Tesla late. Didn't stop it today, up another 2.5% or about $7, closing right around 283 3/4 or so. So a decent day for good old Tesla. And let's see how our old friends, because we don't really care about the full day. We just want to see what was lighting it up on the far out of the money downside. That's where we like to look. Call us strange, but that's where we like to look. The Jan 2019 50s are our trade of choice. Doing about 227 today, so actually a light day. They've been pushing 1,000 a lot of late today. 57,000 open on this strike, so they've grown in OI substantially here. Let's just look over the last few months here. Yeah, they've added well over 10,000 OI just in the last month or so on this strike. So yeah, a little bit about a month and a week or so, they've added over 10,000 contracts. So not a bad growth rate, well over 20% OI growth here on this strike just in the last month and change. So people are liking themselves. These puts, the 2019-20 puts, not doing a heck of a lot today. Only about 65 though, still lighting it up. About 8,500 open on that strike. So I guess the 50 is not bearish enough for you. And some of these articles you read out there where they're going to be out of cash in 6 months and all these other crazy things, you could see how maybe some people would, if they believe that, how the 20s would be a great trade. If you want a little bit longer term to make your time horizon come to pass, then 2020 is your place, I should say. And those 50 puts a little quieter today as well. I guess that upside day doesn't translate to a lot of far out of the money put activity. Go figure. Doing about 32, about almost 15,000 open on that strike as well. Let's do a little cursory glance back into the dark ages. This one also has gained about 50% actually in its OI just over the past little over a month, about a month and a half or so. It was about 10,000 OI back in early April, and we're already pushing 15,000. So yeah, a lot of action in these far, far out of the money puts. They continue to be very dominant. Also worth noting the 2020 100 puts, lighting it up to the tune of nearly 300, 10,500 open there. So people continue to be interested in, people continue to like these far out of the money puts. These seem to be pretty interesting, pretty bearish bets. I lean towards the hedging of the credit default swaps here, but still interesting stuff here to see so much just straight up bearish activity and growing over the past couple of months. Read into that what you will. Some of that, of course, undoubtedly due to that article that was, shall we say, inspired by our show here, talking about those puts out there. Our friend Sahib, they're writing about that, but surely some of that has driven some attention to these indeed. But still, interesting to watch the action out there. Let's see what other action was catching our play. This is kind of a weird one, Mr. Rock Lobster. I'd be curious to hear your thoughts on this. It was in PayPal Holdings Inc., ticker symbol PYPL. Closing today, 81 and a quarter, up about a half a buck, or about 6% over percent. So right pretty much in line with the market. It's the name that does about 32,000 contracts a day. So PayPal trades it up. Today doing about 106,000, so over 3x that amount. And it was kind of all over the place. It looks like, I guess, if you break it down in the aggregate, it was kind of buying an AUG stupid with selling some SEP and then also selling some ACH to boot, as the Canadians would say. So let's see if we could break it all down here. A lot of stuff was lighting it up, and it was going up in all different kinds of variations and spreads, which makes it ever so fun to parse. First thing that caught our eye, one of the bigger trades hitting the tape first off, was an AUG SEP 72.5 call spread going up about 14,000 times, with paper pretty much buying the AUG 72.5s for 1040, selling the SEPs for 1093. So doing that for a 53-cent net there. But that wasn't enough. That would be pretty straightforward if that was all they were doing, listeners. But then a little bit later, right around, looks like around 1:30 or so, they came in to do the AUG 72.5, ACH 72.5 spread as well, buying the AUGs about 7,000 times, selling the ACHs doing about 7,000 times, doing that for, looks like about a little over $1.05 for that one as well. And then they came back and decided, we need ourselves some more AUG. That's not enough. We need the AUG 75s, 13,567 times. Very close numbers to what we saw before, but a little bit less. For 860, picking those up for 860. So pretty much way above the offer. I think it maybe got printed a little bit late on those. And then also coming in, that's not enough as well. They decided let's sell a few more to the tune of 13,747 of the ACH 75. So let's tally up all the action here. Paper bought about 14,000. Actually, no, there's two lots of that. So it's 14 and 7, so 21,000 of the AUG 72 halves. And then they bought 14,000 of the AUG, or close to it, of the AUG 13.5 of the AUG 75s. And then they sold about 14,000 and change of the SEP 72 halves. And then they sold 7,000 and change of the ACH 72 halves. And then they sold, looks like, about 13, almost 14,000 of the ACH 75s. So interesting enough, too, all the AUG is opening paper. Those are all new contracts, so there's no OI on those strikes. So all opening paper in AUG. The SEP has some open interest, so they could be deciding maybe to close out their SEP. There's about 14,000 and change on the SEP strike. So perhaps closing the SEP, in which case that would make it even odder. to be rolling closer in AUG. You don't typically see that. You usually see them roll in the other way. Also worth noting as well, there is pretty similar OI on the AUC 75s and AUC 72 halves. There's about 7,000 and 14,000 open on those strikes as well, which lines up pretty nicely with today's paper. So it could be a case of someone deciding, I want to move up all of my trades to August, that would also be interesting and or odd, because you can probably count on one hand the number of times we've seen that done for size here on the odd block. Again, usually it's the other way. Listen, people are rolling up or rolling up and out. Very rarely are they rolling back and sometimes down. So this one's all sorts of funky. Let's look at a chart here and see if we can make some sense of this bad boy. A year ago, PayPal was pretty much right around $50, 49 and change. So they've had a pretty good run since then, closing today 81 and a quarter. They got as high as about 85 back at late January, right before all the kerfuffle happened. And they've been kind of floating around these levels. Got down to 73, actually. So they took a little bit on the chin. 71.5, actually, not that long ago after earnings. So they've had a bit of a range. They've rallied 10 handles since that 71.5 level. So it's been a good run, even of late here. Long way around, Mr. Rock Lobster. A, any of your crazies trade this thing? Because it's been moving and doing some paper. And then B, what do you make of this, shall we say, somewhat crazy head-scratching paper?
I believe Mark was looking at like time spreads and stuff like that on it. The paper, though, is, some of our simple rules. Rolling forward, I mean, are they taking profits? It kind of looks like it because, PayPal has been doing okay. It's not the highs of it was maybe in December, but short term, I can see them taking money. But why move to August? I mean, the delta on those, the SEP in October being a close is pretty high. And then move to August. This is like, I don't get that at all. I'm trying to figure out, so do they want a higher delta contract is the only thing I can think of, because they're moving closer to the money and it's more of a, it's more of a stock proxy, $10 in the money for PayPal and is pretty, it's what, 95 deltas or 92 deltas or something like that. So really, I don't know, just a real aggressive long after they already were aggressively long, but they're like, oh, I'm not long enough. I need to get longer. And also look at the dollars. It's not like they're saving a lot of money by buying a $10 call. So, I mean, it looks like a straight up stock replacement. And I mean, the only thing I can think of is, okay, if PayPal gets taken over, they'll do better by owning those August calls, August 72.5s. That's the only thing I could think of that even remotely makes sense for this trade. What say you, sir?
Yeah, this is one of those ones, it looks very strange until you start looking at the OI. Then it seems like it's clearly a roll and a roll backwards, which is in and of itself is worthy of inclusion in the odd block. You're right. The only reason you could do that is you want to get a little bit closer to the fire. You want that gamma to sing a little bit more. You want those deltas to pop. But that's a risky game because you're cutting your time horizon a lot shorter, and that popping could move against you. So it's certainly interesting. This is one I'm going to mark this right now. This is going to be in our to be watched because this is an interesting one on multiple levels, and we'll have to come back to this one. AUG stupid. That alone is fun. Then funky, crazy SEP rolls and AUG, all sorts. You could parse this one 8 ways from Sunday, but we got to keep rolling, listeners. We can't spend all day, pun intended, on that one name. Uncle Mike's chomping at the bit to get in here. Let's see. Union Pacific. Let's go on next. Union Pacific calls. That wasn't enough call palooza. We got some more calls for you going on here. This time in Union Pacific, ticker symbol UNP. Closing today, 145.08, up about $1.28, about almost 1%. Not a bad day for good old UNP. This is the name that does about 12,000 contracts a day. Today, doing a little bit less than 2x that, right around 22,000 contracts. And what we saw out here looks like a little bit of call love, call fever, a little bit of call rolling in particular, perhaps. Let's go out here to June, and we could see for ourselves. In particular, it was the June 150s and 152 halves that were going up today. We saw 150s doing about 3,500 contracts, at least in this clip, total of about 4,400 going up on the day. 3,500 going up right about mid-market for $1.10. Then we also saw the 152 halves going up about 7,000, a little over 7,000, total about 7,700 actually on the strike today, going up to about 7,000 times and change for some split prices, 65 and 68 cents. Those coming in and pretty much crushing the bid on those. So it could be perhaps an opening 1 by 2, buying the 150s, selling 2 of the 152 halves. It is worth noting there is no OI on the 152 halves, but there is about 23,000 shares open, or contracts open, I should say, on the 150. So perhaps someone deciding a little bit of profit on those is not the worst thing, and rolling up and doing so 2x with a little bit of house money. Let's see here really quickly if we can see where that OI mostly came in. It's been open for a while. It's been open, at least on this little graph I have here, goes back about 2 months, and it's been open longer than that, back beyond March 26th here. So it's been open for a while. It's not like this was a recent trade and they decided to roll it just in the last week or so. So interesting paper there. Let's go look at a chart and see if that will help us parse this a little bit more. A year ago, UNP was trading right around 108. So they've added about 40 handles almost in the intervening year, getting as high. It's pretty much right now, it's pretty much a 52-week high, right where we are right now, right around 145. So it could have been someone sitting on these 150s for a while, or it could be someone who was short these bad boys, getting a little scared and deciding to roll up, but then doing it 2x, which is also interesting. Mr. Rock Lobster, what's your spidey sense telling you on these calls? You feeling roll? You feeling straight up opening 1 by 2? What's your spidey sense telling you?
This is kind of an interesting one where, because it went marked all kinds of stuff. Don't we have some buy right markers in here and a little bit?
Yeah, there were some stock legs going up. So
it's one of those things where, okay, could it possibly be like calls, like a call spread in stock? I'm looking at that thinking, well, June is not very far away. So, what are you doing with this, right? What are you doing with this position with, this much time to go? It's not they're out of the money options. So, I could see it rolling up and taking a position off a little bit, but I'm, again, a little confused on it. I think the easy way would be a kind of a roll up. That would make the most sense, but it's not like UNP is Amazon, right? So you're rolling your 50s up to the 152 and a halves. I'm not, I think it just feels like kind of a long road to hoe to ask for another $7 on the stock in a month. It's because, again, it's a low vol stock. So this is one, again, you guys have mastered the head scratching paper for the day as to why the heck you would want to do this. The only I could think of would be some sort of little delta neutral trade, but the trade as it looks is only about 10 deltas per spread. If they did it 1 by 2, then the fact that they traded stock against it at all is a head scratcher, because 1 by 2 would be about delta neutral. So, all kinds of weird. The thing that I would think to make it an aggressive play was, okay, I'm going to buy the stock, and then I'm going to do this 1 by 2, and see if I can get a little upside kicker out of it. That's the only thing I can think of on this. If it is that way, it's like, the stock leg is a little bit more nebulous because you can't really figure out what's going on with it. But oddball paper for UNP with no real earnings coming out, and you're trading $7 out of the money. It seems, I don't know if that would be on Tosaw's list of how to buy out of the money calls. I think let's just call it aggressive. It would be an aggressive path to take.
Yes, we shall see shortly when Uncle Mike commences his strategy. But before that, we're not quite done yet. And if you guys like your cheapy calls, your out of the money calls, then we got some for you in terms of our cheapy calls of the day. These are going to come courtesy of our friends at NOG, Northern Oil and Gas Inc. Ticker symbol, NOG, N-O-G. Closing today, $2.62. So if that HMNY we were talking about before, that 60-odd cents was too cheap for you, but $5 is too rich, these guys splitting the difference for you right here in the middle, 262, up nearly 9% today, or 21 cents. So a good day for NOG. And in particular, this is the name that does 1,600 contracts a day. Today doing about 8,000 and change, 45-1 calls over puts. Let's go find where those calls, they should jump off the screen. Yeah, they do. They're the D3s. Not a lot of strikes, not a lot of months to play with here, listeners. You can see it all at a glance. And the D3s jumping off the screen here doing 4,972 of these bad boys for 45 cents. Coming in right close to the bid, right off the bid. There was like 40 at 60. They came in at 45 cents. So it looks like these bad boys are selling them. Doing it on our old friends, the Mayaks, who were just on the Volview show a little while ago talking about spikes. Check that one out if you haven't checked that one out, listeners. If you're in the VIX alternative arena, they got one for you, at least coming soon. 5,000 and change of these bad boys total on the day. Open interest only about less than 2,000, so clearly open in paper. Looks like someone perhaps doing a little bit of overwriting here. Perhaps 45 cents through D. So if they own the stock, they're getting that 45 cents. Plus they're getting another 38 or so on here. So that's not a bad little return if it does work out their way all the way through December. But they're tying up some capital all the way through December. Let's look here and see how likely such a move is. And what a year they've had out here in NOG. A year ago, they were about $1.90. Yeah, right around there. And then they kind of spiked to 2.25, then dropped right back down. They got as low recently. They were trading HMNY levels not too long ago, back in October of last year. They're trading 68 cents. And then they had a bit of a turnaround, looks like, and started rally ho mode all the way up. They got all the way up to about 2.9, just couldn't quite hit 3, but got close. 2.96 back in mid-January or so. Then we all know what happened in late January and February. Things sold off. And now they're on the rally back mode again, including today, gapping up. They were trading 244 actually today. They opened up right around their low today. It was 244. So this thing's been on a bit of a tear of late. And it seems like someone, Mr. Rock Lobster, taking advantage of that perhaps to do some call overwriting. Or you think something else is afoot out here in your old friend, everyone's favorite, NOG?
And everybody's favorite noggin. Okay, so here's another, again, I understand people want yield, but why do you overwrite a $3 stock? What I mean is that
it does seem to take some of the luster off of it, does it not? You're buying a 262 stock. You're not hoping for it to move to 290. You're hoping for it to move pretty good, right?
I'm in here. I'm scooping the bottom, and I'm writing the threes. I got the yield part, and if they get taken out, they're going to do great, and it's still a good return and all of that kind of stuff. But again, I think Mr. Tosaw, not quite the way he might trade this, and it doesn't mean this trade is going to make money, but holy gosh, you buy a $2.50 stock that's been knocked in the dirt on oil, and then frackers are trying to make money and all that kind of stuff. So yes, this one actually has me scratching my noggin. Just buy it and forget about it, and then and then on you go. So
yeah, I was kind of thinking the same thing when I saw it. I could see the spirit behind it, but it completely deflates the trade for me. I was like, well, there goes any of the excitement. I mean, especially because he's doing it all the way to December. I mean, if he was doing it a little bit nearer term and trying to roll and be aggressive, maybe I could see something like that. You're not tied up the rest of the year on this thing, but he's tied a nice little bow on this package, and he's done through the rest of the year. So I guess he makes 80-odd cents, 260, 30-odd%. Not the worst thing, but it doesn't warm the old cockles of the heart and get you excited the way a $2 stock going to 10 would. He's not getting that. He's out for 80 cents. So interesting stuff. All right, let's keep on rolling. Let's see what Uncle Mike has to say. Let's see what you guys chose, actually, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, sir. I need a drum roll sound effect here because I'm going to pull up the results right now. I have not looked since we talked, so I have no idea if it's changed wildly or markedly. It looks like it's pretty much right around percentage-wise where it was where we talked before. People want themselves some out-of-the-money calls, so with 45%, sir, people saying they want to learn how to profitably buy out-of-the-money calls. So have at it, sir. The floor is yours, Uncle Mike.
All right, well, let's talk some out-of-the-money calls, by gosh. First thing that I want to mention when buying an out-of-the-money call, I do it, I'm just going to, I typically do this on an indice or on an index. So that's the first thing that I like about them, just because of the fact that you do have the vol skew that exists that we talked about. I forget if it was last week or the week before, in that a lot of the times the calls, out of the money calls, the same distance out of the money are less expensive than out of the money puts. So it's for that reason that I typically like to use this on index, along with a variety of other reasons that I use an index instead of just individual names. So that's where some of this experience is coming from when I'm going through this. Now, I have bought out of the money calls on individual names in the past. And typically, it's not something that I really do very often. But in the last year or so, I have been doing it more just because of the fact that we've been in a lower vol environment. So with that being said, a couple things that you have to remember on buying out of the money calls. First thing is that let's say that you have a trading account of $10,000, let's say, and maybe you have a higher percentage trade. Maybe you're selling an out of the money spread per se, and it's less likely to go against you all the way. So maybe you have a little bit, maybe you have $4,000 or $5,000 at risk with trading your various spreads on various positions. Maybe you have another $3,000 or $4,000 at risk to maybe do some diagonal spreads of some sort. Who knows? But whenever you're doing buying an out of the money call, the thing that you need to do with it, my opinion, is you need to have much less money on the table than you would in any other trade. So let's say that normally you risk 50% of your trading account on, and keep in mind of your trading account, maybe that's say 1 to 4% of your overall net worth, but of your trading account money, let's say that you normally risk about 50% of it at one time, because you always want to have some powder dry, whatever the case may be. And I'm just making up numbers here. If that is your number about what you do, if you're buying an out of the money call, I would only have maybe 5% of your trading account at risk buying an out of the money call. And so by doing that, what that does, that actually gives you the ability to rest easy at night. If you can't rest easy at night, you're over levered. That's just the bottom line. I mean, there's always, you got to take some risk to get some reward. I understand that. I get that. And if you're looking to just, this is the big one, I want to do this one, and then that's going to pay off the house, don't trade. You're stupid if you do things like that. But if you want to have this as a legitimate, viable strategy, step one is extremely important. And if you don't do step one, if you're not willing to do step one, stop listening now, okay? Because it won't work, in my opinion, consistently over time. You need to have a much lesser risk at out of the money calls than, or out of the money puts for that matter, if you're doing that, than any other strategy within your trading realm. So with that being said, the rest of it, it's pretty easy to execute. You just click buy to open, you buy the out of the money call, and that's it. You're either going to make a lot of money or you're going to lose a lot of money. That's the bottom line with it. But with that being said, how do you protect what little risk you have on the table with risk management? Well, here's how I do it. First thing that I like to do this in a lower volatility environment. Now, volatility is only low if you think it's low. What I mean by that is that just because Andrew says vol is low right now, or I say vol is low, or Sebastian says vol is low, or CNBC or Bloomberg says vol is low, it doesn't necessarily mean vol is low. When someone's saying that vol is low, that means that they believe volatility is going to go higher. And it is their opinion. It might be right, it might be wrong, like anything else. Some people believe that the price of Apple is very high right now. Some people believe that the price of Apple is very low right now. Just to clarify, vol is low only if you believe that it's low. So once I feel that we are in a low volatility environment, then it's something with which I would consider. Now, how far out of the money do I typically go? I like having I would say maybe a 10 to a 20 delta about 3 months out to start with. And keep in mind, this is all about. I want to underline with 3 times the word about as I'm doing this, because maybe the vol is a little bit lower on a 22 delta or whatever. So this is just kind of a general guideline of things with which I've looked for in the past. Now for time frame, I like to go maybe 90 to 120 days out. Why is that? Well, time decay is not going to beat you up so badly in the first between day 120 and day 90. And if you believe that volatility is low, vol's not going to beat you up either. It can, of course. Vol can always go to 0 in theory. But the way with which I protect myself against the theta, the theta and vega monsters is that I try to go further out and have a sentiment that volatility, if anything, could go higher. So with those 2 things in mind, that's how I try to mitigate those risks, along with the fact that, once again, I have a smaller amount of money on the table than I normally do, and I am fully prepared to lose 100% on that trade should it happen. Now, with that being said, at what stage do you kind of look to make some adjustments? Well, if the market goes against you, let's say that the market just goes totally against you, it goes down, you're wrong. You're going to lose money, no doubt about it. But if vol's coming up as the market's going down, then it's not going to bite quite as bad as you may think it will. Now, I don't know how bad you'll think it'll bite, but typically I'm pleasantly surprised with how little I lose if it goes against me right away. And the reason is that Vega kind of holds you up a little bit, not a lot, but gives you a little bit of boost and eases the pain just a tiny, tiny bit. So that's the good part about it. Now, at some stage, usually if I'm going to lose maybe 25% on the call or something like that, I'll just get out and try and find something else because I just have a hard time watching things go down. Now, there have a lot of times what I'll do is I will use maybe selling a put spread or selling an out-of-the-money call or something like that to mitigate the time decay risk on it in some way. But at this stage, and sometimes I don't. But for this trade, we'll just assume that I don't because we're not into doing stuff today because we only have time to talk about out-of-the-money calls. But a lot of times I am doing stuff to kind of mitigate time decay and delta risk and things like that. Now, what if it stays the same? At some point, time decay is going to have its victory. Time waits for no man. All options eventually expire with no time value in them. Now, they might be in the money. That could be good, but eventually all of them will expire with no time decay in them. Well, what I like to do, usually when we get to between 30 and 40 days, if let's say in theory the market were to have stayed the same, at that point I'll usually exit the trade based on time decay. I like to give it a few, maybe 2 or 3 months to do its thing, maybe scalp some gammas in some way, shape, or form doing stuff. And if the trade didn't do what I had hoped it would have done by then, time to move on. So that's typically what I like to do. And the reason for that is that you have exponential time decay, meaning that time decay, the final 30 to 40 days, is going to be working against you a heck of a lot more than it is from day 120 to day 50 or whatever the case may be. So that's why I like to get out of it. Now, what am I looking to make on this? Well, this is where it gets fun. There's something, the reason why you would consider buying an out-of-the-money call is gamma. I've challenged anyone to come up with a more levered instrument and a better way of making money, if you're right, than an out-of-the-money option. There's no better way of doing it, if you're right. So what I mean by that is that if God were to tell me what a certain stock or what an index is going to be doing the next day, then everything that I'd put my entire net worth into buying as many out-of-the-money calls as I possibly could if I knew that that specific index was going to go higher. There's no better way of doing it. However, the unfortunate thing is that God does not tell me exactly what various indexes and underlyings are going to do every day. So with that being said, you have to kind of take that with a grain of salt. If it does go higher, gamma is working for you, meaning that the delta becomes higher as the call gets closer to being at the money. It becomes a more and more powerful call the closer it gets to being at the money, assuming it happens soon enough and time decay and volatility don't work against you as it's getting closer. So by doing that and being in this position, it's kind of like buying more stock as the market's going your way without taking money out of your pocket. Folks, if that doesn't excite you, then I don't know what will. So as it's going your way, it is a very explosive instrument. At what point do you take profits? Well, typically what I like to do, I like to kind of scale in and scale out a little bit. So let's say maybe it's going my way to a certain percentage. Maybe I might sell some calls against it. Maybe I'll take some calls off the table. It just kind of depends on what the market does. But ultimately, I like to leave at least something on the table in case we really do have a major bull market. Not a lot, but just a little bit. I'm of the school of thought that I believe try your best to never take a winning trade and turning it into a losing trade. If you buy an at-the-money call for 30 cents, you can sell it the next day for 35 cents, let's say. I'm not going to do that. But maybe when that call, let's say I bought 20 contracts, maybe when that call is at 60 cents, maybe sell half of them, let the rest ride, let the market pay for your potential profits, maybe take on that risk. That's another thought. It all just kind of depends on where you're going with it. So with that being said, those are some of the things that I like to look at and do in a lower volatility environment. Once again, it's not something that I do very often, quite honestly, and I could probably count on two hands how many out-of-the-money calls I bought in 15 years of trading, but those are some of the things with which I like to look at when doing so. Once again, the main rule, if you don't do rule number one, then don't do anything else. You need to have a much more limited amount of cash on the table with out-of-the-money calls than any other strategy that you have in existence. If you don't follow that rule, then, well, you deserve what comes to you. You might as well just go to the casino, in my opinion. And that is my take on out-of-the-money call buying.
All right, and we got to keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we break down what we're keeping an eye on for the rest of this week until we get back together here on the old show on Thursday. Let's go around the horn. I mentioned some of the earnings we got coming up later on in the week at the top of the show. Let's see, pull out a few of those again. We have, like I said, Kohl's tomorrow, Lowe's and Target on Wednesday. Good old Best Buy and Foot Locker on Thursday and Friday for all those names out there. Also, we got Target on Wednesday before the open. We've got Best Buy on Thursday before the open here. We've got, like I mentioned, a lot of AutoZone and Advanced Auto Parts on Tuesday. So kind of take your pick. There still are some names to keep an eye on out there, even if a lot of the big ones have popped off. That said, Mr. Rock Lobster, what is on your radar for the rest of the week, and what are the hardcores? What are the crazies slinging over there the rest of the week?
We're in kind of one of the hold patterns for what is everybody slinging this week. I would like to sling a little more vol product if we could get some help. This Baidu dropping a bunch in the last couple days is popped up on the radar screen. Don't quite know what to do with it yet. It looks like just some news about the CFO, but the stock is down a whole bunch. But then again, it was kind of a high flyer. So, I mean, really, you've got probably some of the lowest closing VIX for quite a while. Supposedly some good trade news. So I like to be bullish, but I'm it's one of those things that are kind of where's the upside catalyst for this market? So it just feels like I'm looking for, at least me, just trades that are making money on the sideways action right now. Sideways. So that's what I see. It's about as exciting as those NOG buy rights is basically what it is. Super exciting. If you want a little bit more excitement, listeners, we did ask you guys coming into today, because we talked about it before. It is a holiday week, so typically a tough time, particularly for all those VIX call buyers. VIX tends to get a little crushed in these types of environments. You already mentioned how they were coming for the futures pretty aggressively this week. So I thought we'd ask you guys, we'll flip the script, we'll turn it to you guys, our savvy VIX traders in our audience. We know that you are legion out there. Where do you guys, I should say, think the VIX is going to open? A little bit of a curveball for you. Open, not close on Friday. Where is it going to open
on Tuesday morning. So we gave you some choices. We gave you nice ranges, make it a little bit easier for you. Between 12 and 14, or so right around here. A little bit higher, between 14 and 16. A little bit, or in some cases a lot lower, between 10.5 and 12. That's a good range to the downside. Or much higher, north of the 16 level. Get in there. So far, the early voting is saying higher, between 14 and 16 on Tuesday. So we shall see. We'll also see what Uncle Mike's got cooking. Uncle Mike, what is on your radar the rest of the week, sir?
Well, I want to see if we can break through the 274 level and stay there on SPY. That is a little minor point of resistance. I know it is a holiday week, so things are a little bit crazy during a week like this. And by crazy, meaning not a ton of volume typically. So wanted to see that, and just trying to see where the latest thing is going to happen with this China tariff deal. Be watching that Twitter account.
All right, listeners. There it is. That music means we've come to the end of yet another funky, fun-filled edition of the Option Block. Talk some crazy UA and a bunch of weird names, some cheapies, some a little bit more expensive names. Uncle Mike held court on buying some out-of-the-money calls, everyone's favorite trade. I know I do it all day long. Just kidding. I do about as often as Uncle Mike does, probably less, but still worth discussing over there. And then, of course, your thoughts on what we should educate. Some earnings, all sorts of fun stuff, a lot of good stuff coming in. Make sure you guys get out there and vote in our poll this week so we can talk about it on Thursday. And before we go, let's go back around the horn one last time. Let's start with Ye of Rock Lobstering. Sir, what is coming down the pike in your guys' neck of the woods?
Well, VXX Made Easy starts tomorrow. You get a free month of my vol newsletter, which is kicking total butt. I have to say, considering that we had the vol apocalypse, my subscribers did well. And you go to optionpit.com and sign up for that. And in our Pro Trader Summit, I think there might be a couple spots left in mid-June, the 12th to the 15th. So lots of stuff happening at Option Pit. Stop on over, and you get to listen to Mark every day talk trading.
What's better than that? He doesn't mean me, listeners. He means the greasy meatballs. So buyer beware when it comes to that. All right. And last but not least, Mr. Uncle Mike, you're holding court under a new domain, St. Charles Wealth Management. What can we expect from this new venture, sir?
Oh, all sorts of stuff. We are actually having a class. I'm actually having an in-person event at my office, 303 East Main Street in St. Charles on May 31st. If you're in the area, let me know. It's going to be on the simulated index concept. 7 o'clock at night. If you want to come and talk some option trading, come on down. We'll be happy to have you. Shoot me an email for more information, mtosaw@stcharleswealth.com.
stcharleswealth.com. Head on over there. Tell them what you think of the Fox. If you think it's foxy, let him know. stcharleswealthmanagement.com to learn more. On behalf of Uncle Mike and the Rock Lobster and indeed myself, I thank all of you out there in the listening audience. Downloading, streaming, subscribing, asking questions, all the fun stuff that you guys do. Stay tuned to the network. We'll have some good stuff coming for you throughout the week. Of course, more panel audio coming from the OIC. I was at the Big Swan Wealth Advisors Forum, CIO Forum last week as well. That'll be coming out, hitting the network soon. The advisors option, as well as maybe some more fun live stuff. So if you're listening live, you might have some more good stuff, some interviews lined up for later in the week. We'll see if we can get those coming out to you live as well. Should be fun. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.